Introduce to you this phrase by Jesse Livermore because it was written close to 7 years ago, and it is so close to the truth still to this day. It goes like this: there's nothing new on Wall Street or in stock speculation. What has happened in the past will happen again and again and again. This is because human nature does not change. It is human emotion that always gets in the way of human intelligence. Of this, I am sure. Friends, I have news for you. That is so true. If you're watching this video, think of all the time that your emotions, your excitability, your fear, your hope, your greed got in the way of making a rational decision, a clear, concise, well thought out plan. Most times, it is our human emotions that get in the way of our human intelligence. Another favorite phrase of Jesse Livermore's that I firmly believe in is that, and I quote, "All through time, people have basically acted the same way in the stock and commodity markets as a result of greed, fear, ignorance, and hope. That is why the formations and patterns recur on a constant basis. The patterns the traders and technicians observe are simply the reflections of human emotional behavior." And that is such a true statement. In fact, we will go through and show you time and time again how formations and patterns reoccur. What is the only difference is what the outcome of those patterns are. We don't know if with one of my signature setups, such as the high close doji pattern, if you're going to get a 30 pip rally or a 300 pip rally. We don't know what the outcome is on each signal, but the patterns reoccur. The results are just different. So what we're going to teach you in this trading course is how to identify those patterns and how to trade those patterns successfully by using risk management, stops, of course, and certain profit objective targets. Now, many of the techniques, ideas, and principles that we will go over in this course deal with simple concepts that many people try to make more difficult, and then of course it becomes more complicated. Issues such as selling resistance and buying support will be illustrated in various fashions. And that is such a simple concept. Remember, we're looking to sell high, buy low. We're looking to sell resistance and buy support. There's many times where people look to try to get real fancy and try to look at getting more out of what a particular trade may give, or they look to try to make all types of fancy breakout patterns. And truth be known, if you just wait patiently, and if you're disciplined to look for the formations and apply your strategy, you will have a much more, at least an easier time at trading, and probably a much better result-driven opportunity if you just follow the plans. So look at selling resistance and buying support. That is going to be, number one, the most simple but yet complicated approach to trading. The tools and techniques that I'm going to teach are absolutely going to help you stay focused and grounded on these concepts. Let's go into Forex versus futures. Trading Forex offers leverage, and of course leverage that the individual can control. You can increase your leverage, decrease your leverage through the use of margin. An individual investor has the choice, of course, to accept the responsibility. With every risk comes reward. The higher the risk, of course, the higher the reward. So with Forex, you can even decrease your leverage. You can decrease your size of what you're trading. You can go through either a 100,000 lot size, a 10,000 lot size. You can increase or decrease your amount of contracts and lot sizes. In fact, you actually have the ultimate control of your trading plan. Now, futures, we also have lower contract sizes, such as you have the S&P 500 futures contract, which is a stock index futures. The full-size contract, every point is $250. And then there's the E-mini contract, which is 1/5 of that size, which is $50 a point. There's, of course, the Chicago Board of Trade's mini Dow contract, where every Dow point is $5. So 100 points in the Dow, and we've all seen the stock market move. And you hear the Dow quoted in the media almost every day in one form or another. It's given reference to. It's the oldest reference stock index contract there really is. And so when you listen to the media and you hear the Dow was up 80 points today, or the Dow was up 100